Let's discuss recording payroll. In our example, we have a summary of Royce Co's payroll for the month. We have sales salaries, federal income tax, office salaries, medical insurance, Social Security, Medicare tax amounts. You want to take note of the state employment and also the federal unemployment. And also only 25,000 of salaries are subject to unemployment taxes. In essence, we need two journal entries when recording payroll. One for the employee and another one for the employer. I suggest you take a picture or a screen capture of this problem as we go through our calculations and then to our journal entries. And here we go. So let's start with the journal entries for the employee. In this problem, we're going to have two debits. Our first debit is to sales salaries, and that's going to be considered an expense. So sales salaries, expense. And this is an amount of $125,000. Our next debit is to office salaries. Again, also an expense. This is an amount of $35,000. Next comes our credits. In reality, our credits are anything that the business deducted their employees for. For example, our first credit is to Social Security tax payable. This is in the amount of $10,200. Our next payable will be to Medicare. So Medicare tax payable. Another deduction from the employee's paycheck. Here it's $2,550. The next deduction is for federal income tax payable. Money that the business deducted from the employees and later will pay back to the government. This is an amount of $32,300. Next, we will deduct for medical insurance. So medical insurance payable. This is for $7,370. Now, here's our debits and here's our credits. If you notice, they do not equal one another. When calculating gross and net pay for employees, those debits are actually their gross pays. And all those payables that we've done thus far are your deductions. Your last credit is the salaries payable. And that is actually your net pays all combined from your employees. In this case, it will be $107,580. Now your debits and credits equal. All right. Again, we only need two journal entries for payroll. One for the employee and then now one for the employer. Once you set up the employee's journal entries, you'll use some of that information to complete the employer's payroll journal entry. First, you're going to want to debit payroll tax expense. This account, you don't know what the amount is. In fact, you have to wait until after you record all your credits. So let's work on our accounts that are going to be credited. The first two accounts are Social Security tax payable and Medicare tax payable, just like the employee's payroll journal entry. In fact, what you're going to do is you're going to match the employee's journal entry for the same amounts. So here, Social Security tax payable was $10,200 previously, and you're going to match that with another $10,200. Medicare tax payable is the next one, and you're going to match the previously recorded $2,550. So not only does the employee have to pay for Social Security and Medicare, the employer also has to pay for Social Security and Medicare. Next, we only have two credits left. The next two credits are federal unemployment tax payable, and only the employer pays this. So here in our problem, you are limited to a certain amount that is taxable because there are limits. In this case, our calculation will give us $200. Lastly, our last credit is to state unemployment tax payable. This is also limited to a certain amount. Our calculation here will give us $775. Now you have all your credits. What you have left to do is add those up, and that will give you your debit amount. Our debit amount in this case is $13,725. And there you have it. We just recorded the payroll for this company for both the employee and the employer.